Welcome to everyone. In this week video you will learn how powerful and profitable the cycles are. You will also learn how to use them to trade the stock market to increase your profits. This week video will cover the S&P 500 for the week of August 5, 2024. Before we start, make sure you read carefully the disclaimer. In my last week video, we have two different scenarios. Let's see if we have more information. The 5,669.67 high on July 16 is certainly the 40-week cycle peak. Let's start by the 10-day cycle. The last two trading signal was on July 31st for the first one, when the S&P 500 crossed above his cycle line at 5,458 for a potential upside target at 5,525. The August 1st high at 5,537 met his target. The second signal was on August 2nd, when the market crossed below his cycle line at 5,460 for a potential target at 5,383. The same day, Friday, with a low at 5,302, the S&P 500 met his target. The August 2nd was probably the 10-day cycle low. In this case, if that's as correct, Monday the market should rebound. The last 10 days low was expected to happen on Monday, July 29th. If the August 2nd was the 10 days low, it's been late by 4 days. The next one is expected on August 10th. Here are the cycle lines for this week, and their potential target, if the S&P 500 cross above his cycle line this week. The success rate is 100%. The 20 days cycle. On July 19th, the S&P 500 made the previous 20 days cycle low. The next low is expected on August 5th. The last trading signal was on July 19th, when the market crossed below his cycle line at 5,570 for a potential downside target at 5,470. 67 points or 1.79% of potential profits. The target have been fulfilled on July 24th. The success rate is 100%. Here the cycle line for this week, and their potential target. When the market will cross above them, this will confirm the precedent low as the 20-day cycle low. The 40 days cycle. With this week low at 5,302, the S&P 500 meet and exceed the lower part of his last week target zone, when the market crossed below his cycle line on July 24th. The crossing occur at 5,562 for the first line and 5,505 for the second line, providing a downside potential target zone between 5,455 and 5,341, or respectively $107 and $164, or between 1.93 and 2.98% of potential profits. This 40-day cycle low is scheduled for August 5th. Last Friday 5,302 low could be the 40-day cycle low. We will have the confirmation of this 40-day cycle low when the S&P 500 will cross above his cycle lines. Since January the success rate is 100%. Here are the cycle lines for this week and their potential targets. If the S&P 500 cross above them. The 80 days cycle. Lately the 80 days cycle length have an average of 87 days. Last Friday low was 105 days since the last 80 days cycle on April 19th. Just 18 days longer than expected. So we can expected the 80 days form soon, or he even formed on last Friday low. Until we have a better place, let's consider it this scenario as the principal analysis. The next 80 days cycle low is expected on October 8th. The success rate is 100%. The 20 weeks cycle. The last 20 weeks low occurred in April. Like mentioned in my last week video, the last 20 weeks cycle was very long, 175 days, for an average of 136 days, 39 days longer than the Hurst nominal model. If the actual 20-week cycle follow the Hurst nominal model length, the date for this 20-week cycle low is scheduled between August 12th and 26th. But if he have the same length than the first one, Then the low is expected to occur by the end of September, or beginning of October. By the Hurst principle of synchronicity, when this 20-week cycle will form the 40-week low. Technically at that stage of the cycle, the 20-week cycle should cross below his cycle line, providing a downside target. Because we are at the second 20-week cycle, of probably the 18-month cycle, the S&P 500 should technically find support on his 40-week cycle line. But very often in a very strong bull market, the market don't even find support on his cycle line, and make a low above his cycle line. Last week, the S&P 500 crossed below his 20-week cycle trend line. The green line, confirming the 40-week cycle peak, has formed or is in formation. We can label with confidence the July 16th high at 5,669.67 as the 40-week cycle peak. Confirming the 40-week cycle low is still to come. Here the cycle line for this week, and the potential downside target, in case the market crossed below this week. The success rate for the 20-week cycle is 100%. The 40-week cycle. Last week, the market crossed below his 20-week cycle trend line, the blue line. Confirming the 40-week cycle peak, formed on July 16th. From the last major October 2023 low, this cycle is 280 days long. On the Hurst nominal model, the 40 weeks length, get an average of 272 days. So we are right on time target, but if this second 20 week is long as the first one, then we can expect the 40-week cycle low to form in September or even first week of October. Usually at the first 40-week cycle after a major low. The 40-week cycle should find support on his cycle line. But since this bull market is very strong, we can consider it this 40-week cycle won't find support on his cycle line. The success rate is 100%. In conclusion, the S&P 500 has formed his 40 weeks peak on July. The 40-week cycle is due by now, but can run longer than expected. In this case, the low is in formation. If the second 20-week cycle run long as the first one, we can expect this low to form by the end of September, beginning of October. To have confirmation, we have to watch carefully the market reaction with the 80 days cycle line. If you like this video, please click on the like button and subscribe, to make sure you don't miss any future important videos. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.